Hi everyone, this is Rob Roy of Elliott Wave Options and welcome to TradeFinder Live. If you're new with us, we show you this disclaimer. Whether you're new with us or not, we have to go through this disclaimer, and I don't want to make light of it because it is important. If this is your first time seeing it, take a screenshot of it, read it in detail. At some point, I'll highlight the most important things, or the fact that we are not registered as individual investment advisors in the United States, and any money or currency talked about, unless noted otherwise, will be assumed to be in US dollars. So that's the two most important things. So with that said, read the rest of it when you get a chance. If you are new, give you a quick rundown on the format. The way we do Trade Finders, we start off, well, I'll do a few minutes on the current shape of the market. We'll talk about that, where things may be going over the next few days. Then we'll go and take a look at a trade on our website, an alert possibly that we may have closed or opened. We'll feature that. Then we'll go and look at case studies that we've identified in previous Trade Finders and update what's happened since we identified those as case studies to consider and keep an eye on. We'll go through then and look for new ones in this session, and then we'll wrap things up with a Q&A with whatever time we have left at the end. So that's the basic format, and let's go ahead and get into it. So go ahead and take a look at where we are in the market. If you haven't had a chance to look at the latest S&P recording that I did on our YouTube channel, take a look at that. I'm not going to go into copper in this one, but we talked a lot about copper as a leading economic signal. I think it was pretty interesting. And in addition to that, every single Trade Finder session, you all talk about this software program, and this is a profit source, and excited to announce that their brand new version is going to be released likely this week. It's pretty much ready to go. It's got some of the cool tools that you've seen me using years ago when I first got interested in Elliott Wave and realized that that was how I wanted to base my trading. I started searching for what I consider to be the best Elliott Wave software out there, and Profit Source was for me the best, to the most accurate. And so we've worked together for a while, and they've incorporated some of these tools that I've shown you into the new version that's coming out, as well as the search parameters that you've seen in the pre-computed searches. If you are already affiliated with us or have it, watch for your notification. Will be coming out, the email will be coming out very soon with how to access the new version and the particulars of it. So if you haven't, leave us a note on that latest recording, because we'll reach out to you and give you more information that way. So again, if you're already a subscriber, already affiliated with Profit Source, watch your email for your notification. And if you have interest in finding out more about it, leave us a comment. We'll find it on the YouTube channel, on the Dr. Copper recording that I just did. Okay, so let's look at where we are now. So what we've talked about over the last couple of sessions with the S&P is this really important level of support there at 300, and then this bit of a descending triangle that was formed. We can actually clean that up and make it look nice and neat that way. And we broke out, and I mentioned that the 30th of June was the last day of the quarter, and also the pension fund rebalancing. We talked about that. That was last Tuesday, and then we said the first trading day of the month is likely an update, because that's when new money goes to work, and it was not a huge update, but it was an update. And then we've kind of drifted to the upside and then to the downside today. But if we take a look at the moving averages, the 10-day moving average is that lime green line. That's the one that's important for the short-term basis. And you can see that even though the market finished lower today, it didn't mean anything as far as the downward move, because we're still above the 10-day moving average. So all that meant, and here's another cool thing you can do, is you can walk back in time by using those little feet. So you take a walk back, if you will, and you can see that there was separation between where the market was coming in today's trade and the 10-day moving average, just indicating we were slightly overbought. And the fact that we had a down day today just served to satisfy that slightly overbought condition. If you look at the high, the other thing that we've been talking about is we still have this little gap here from the island reversal. It sure looks like it's about to get close. So the low there on the 10th was 318.22, and then the high in yesterday's trade was 317.68. So haven't quite closed that gap yet. Pretty darn close though. So what that means is that of the scenarios, the island reversal, as far as potentially coming down to make a new wave 4 low, is of lesser percentage chance of occurring than moving up and reaching that wave 5 high, and also completing this zigzag pattern that we've talked about. And here's that cool new zigzag tool that I was mentioning. And notice that the 100% extension literally lay the C labels right over top of the 5. So we've got two different patterns. We have the 5 wave impulse pattern, the whole motive pattern there, showing the target right above the 100% level, and then the zigzag from that pivot point low that occurred back on the 14th. And remember that we had a zigzag. So you might be wondering, well, why did you start from there? Well, remember, we had a zigzag that completed here. So moving to the upside there for the new impulse A and then the corrective B. So we've got basically two different Elliott wave patterns, granted within the same 5 wave pattern, but two different patterns that are giving us the likelihood that we'll go up and make new highs, probably in the not too distant future here, right around that 100% extension, 350, 347 or so on the SPY. And then it could get interesting after that if some of the corrective patterns start to kick in. But until that island reversal gap is closed, we have to respect the possibility that it comes down. But once it gets closed, then much higher percentage chance that we go up and hit that C wave and wave 5 target before any sort of another major corrective move occurs. So almost close, not quite exactly, but something to keep an eye on. I also wanted to show you quickly a chart of the VIX. I think the VIX is pretty interesting. There's been a lot of chatter about it. I even commented on that in the video, the fact that I used to do really well trading the VIX back in the days when it was based on the OAX, and they used near month option or at the money options with the near month, and then they moved it out to the SPX, the S&P 500 instead of the 100, and then they used at the money, one strike in and one strike out. And I think they felt like that, you know, giving more of an idea around where the money was and branching it out to the S&P 500 versus the 100 would give a more accurate signal of the market in general. But it's very difficult to actually trade the VIX. I still think the patterns are worthwhile. Still think the patterns are worth looking at, but trading it is challenging. I think my opinion on this is that maybe what that's showing is because so many traders, we don't because we put the math in our favor, but so many option traders just trade at the money options that maybe it's the fact that they include one strike in and out that throws it off, or moving it to the SPX, but it's difficult to make money actually trading the VIX now. So here's two descending triangles. We had a breakout of this first one, and now we're right at the 39. So it's the 38.2 fib corrective level, meaning that we could break to the downside. We tried, we're back up testing that level. So not really a follow through for the way down, but if we do end up breaking to the downside out of this triangle, broke to the upside there, could break it down out of this one and fill that gap, that would make sense, along with a continued move to the upside here with the market. So watch for that 318 level on the S&P. We get that, then the likelier pattern, if you will, is that C wave in the wave 5 completion. So what I wanted to do, and this is going to kind of coincide with what we talked about last week when we look at previous patterns, but in taking a look at the website, you can see that we have a new alert in our impulse strategy on LOGI. And if you remember, that was one of the two that we looked at last week. And last week we actually looked at two different, one that was difficult. I mean, we did a poll and it came out 50-50 as far as to which one we wanted to be the case studies. We said, oh, well, fine, we'll just look at them both. And so we sent this one out as an alert to our subscribers. And then when we take a look at the actual position, I'll show you the chart, and then we'll bring in the, but this gives you an idea of how the alert process works on our website for our subscribers. Is that everything is posted, all the trades are listed here, and you have the actual trade listing, the data was sent out, there's a chart showing you what we were looking at, and we do that for entries and exits and any adjustments in between. So we're not just sending you, hey, take a look at this alert, we're actually sending you alert suggestions on when to get in and when to get out and any adjustments that you may need to make. So we literally hold your hand and walk you through the entire process of the trade. So here's the particulars here, and I'll switch over to Profit Source in a second, but I wanted to show you the detail that we send to our subscribers. You can see the wave 3, look at it, just trucking right along there. And if you've heard me before, you know that I like the 45-degree angle look. Those tend to really hold. In other words, less chance of a more volatile corrective move when you have that 45-degree angle. At some point, we will go through and create a wave 4. But looking at the DMI, so this is kind of like round 2, if you will. We had a really nice looking, it came from below 20, broke above it, just really classic DMI stuff. That's one of our prime confirming indicators, as you're probably already aware. So it came back down a little bit of a rest. Stock didn't really slow down much, a little bit of consolidation right there in the May-June timeframe. And so even with all the stuff that was going on with the wrapping up of everything being closed, it really didn't take much of a hit during that time frame, and just kind of kept on trucking, just caught its breath and then kept moving back to the upside. And then take a look at that red line there, the 200-day moving average. So you might wonder, well, why does that show signs of accumulation? Because I've listed there, the volume is showing signs of accumulation. So when you're looking at trades, you want to see, are they accumulating it, or are they, slowly dumping shares? And the fact that you see a lot of bars just above the 200-day moving average of the volume, but not massive spikes. There were some big spikes back there at the beginning of May, but you just see a lot of bars above the 200-day moving average. And then look at the slope of the 200-day moving average. See how it's gradually moving up? Those are signs of big money players, investment firms that are taking positions. That's what accumulation means, is they're accumulating positions, and they try to stay off all of the volume spike signals and everything else that people look at. So they quietly accumulate a stock. So it's good volume because they're big money players that are buying into it, but they do it over a period of time. They don't want to get big spikes in the price either, to where they have to pay more than they're looking for, and then they try to hide under the radar. So those are the two primary reasons for accumulation. So those are two pretty good indications of where we're going to go. And then when we have a pattern like this, and especially one this way, where there's really not a zigzag located in the wave 3, where is the wave 3 going to end? Well, we've already got a price target forecast up here around 75. That wave 3 could go all the way to 75. If we get a correction in between, then we'll probably add to the position for the move back up. But at this point in time, it doesn't really look like it wants to go through, if there's any sort of a pullback, not much of a significant one for this truck on up. So it could just keep on moving right to that target beforehand. So again, we talked about that one a bit last week, but I wanted to show you the process of how we take one and actually create an alert out of it for our subscribers. So with that, we'll come back over here. Here's the current chart. So this is exactly what we were showing. We'll add here the 10-day moving average just to give you, again, a better idea of that 45-degree angle move. A corrective move for this stock has been just going back and testing the 10-day moving average on the way up. So it looks pretty good. We'll see how things play out. Obviously, a lot depends on the market itself. If anything unusual were to happen, market doesn't seem to care about all the cases. Boy, here in Florida, we hear about it every single day. And honestly, I know some people in the medical profession, and especially where I live, for the longest time, they had almost nobody come into the hospital. And now the hospitals are full, they're closing down, floors. So it's gotten significant, and they announced today in Miami they're closing restaurants back down. I don't know if you saw that. Market doesn't seem to care about any of that stuff. So we'll see. The market's always right. So we'll see how it translates out, especially when the Fed is backing it with trillions of dollars, right? I get it. I understand. So we've accomplished two things. We looked at the website. You got an idea on the alerts for our subscribers. And then now let's go ahead and take a look at the other one that we looked at last week. And then we'll see if we can't find something new for this week. Look how vertical this move is. This one makes me a bit more nervous than the LOGI one because of the difference in the angles. This is more vertical. So that sets itself up for more potential volatility. Now you look at the DMI, and this is why this one was on the results last week. And a lot of you like this one because it was, again, a 50-50 split over which one we picked for our case study to watch. And it's kept on trucking along. So it looks pretty good. So check these out from last week. You know, we're still trucking up with LOGI, RMD. Again, those of you that have been watching the TradeFinder since the beginning, you know that we've had a pretty darn good success rate. And we'll take a look at the one problem child in all the weeks that we've been doing this of the case studies that we've had. And then we'll refresh on a couple more before we look at these, because those of you, I was telling those of you with Apple that it was likely to go to 400, but at what point do you get greedy? Well, if you're greedy, you've been rewarded so far. That doesn't always happen, though. Don't misunderstand that. Greed is usually something that gets you in trouble. But the ADX is still moving up. It's at about 30. Good separation still between the two directional indicators. A little bit of a move back today. Not much, though. And just looks really good to continue to move on up to the upside. Breaking out of this long consolidation that we'd had right through here. So there's that launch pad effect that I talk about all the time when you get a real sideways consolidation and then boom, the blast off. And again, the only thing that made me a bit more nervous about this one than LOGI was the fact that the direction is just a bit more vertical. So is this a touch of a rounding top? I don't know. So again, you know, when do you take your profits? We help you with that as subscribers with the alert exits. Let's take a look at the one, just to be fair, because we pat ourselves on the back when things are going well. But here's the one that has been a bit of a problem, but now it's morphed into, if you wanted to adjust this one, the way to adjust this one would be into a triangle. And then whichever way it breaks from here, you're in good shape. It's sitting right there at 60 and had this vertical move. See, here's what I'm talking about. See, remember that? See that look? See this? It's almost the identical angle of ascent that the stock went to the upside. And look what happened. So that's why I was telling you that I was a bit more nervous about that one. Hence the reason we didn't send that one out as an alert to our subscribers, because it sets itself up for a more volatile move, and that just comes with doing this for a very, very long time when you notice things like that. But as far as HSIC, not giving up on it yet. It still could blast out of there, and if you adjust it into a triangle, break to the downside, you're fine there. You recover there too. Big believer in the adjustment process. So here's Apple. Here's what I was talking about with Apple. We're back over here. We're saying that you're probably starting to get greedy if you're still in here, even though there's a very, very high likelihood it goes up to 400 and it's marching up. It hasn't given you much of an entry other than right in here and then maybe right in here on this big march to the upside. But it's hard for me to believe that we're at 372 and we're not going to hit 400. But this one's been fantastic. And obviously, you didn't need us to tell you that Apple was a good trade. So, you know, be fair there. But it did show up on the search. So ZTO, we talked about this one. And here's also the power of the alerts on when to get out, because you can see what happened here with this reversal. But it hit our target. back over here. And then since then, you could have done a little bit better here if you were quick to get out on the open. And it came up and hit high 39 right there. But that one pulled back a little bit and is marched back to, it's almost back to the highs here on today's move. And then match is another example of, look at that. That was a home run if you didn't get greedy. Remember when I talked about normally greed will come back and bite you? So this explosion to the upside, and I highlight again this more vertical move here, getting to the point where it can cause you problems. You had 121% extension. You had a pretty vertical move. It was ripe for a big downward move. So when do you get out? You got to be careful of those things as far as when to pull the trigger. But that was a fantastic one. That one exploded to the upside right after we looked at it. So that was just a couple weeks ago. And then after this move to the upside, then the big move lower. So that gives you an update of some of the past ones that we've looked at. Let's go ahead and look now. And remember, as a subscriber, you have access to the pre-computed scans, which are the parameters that I look for. And it's already updated for today's close, as you can see here with the date, the 7th of July. And for the impulse, there's 4 for corrective. There's 2. That's interesting because it's been 0 a lot of times. But with the fact that the market still, I asked you before twice in previous weeks if you wanted to look at directional versus the consolidating. Everybody always says that's one thing. That's probably the only poll that hasn't been 50-50 that we've done since we've been doing them, is y'all want the directional stuff. So we have 4 of them to look at. Charles River Labs, Meritage Homes, AbbVie, which we have an alert on for our subscribers, and then Clorox. And then can't imagine why that one's on there, right? It was on there obviously way back in the early days of the virus. Let's see what's happened since then. So take a look here on Charles River Labs. Remember, the process is that we get results based on the accumulation of all of our confirming indicators. That's how these results show up. Then Elliott Wave is applied. And that's what we did with the trade scan series, as we walked you through in detail all of the confirming indicators. And now we have the Elliott Wave class, which will be coming out in the not too distant future. So watch for that. So Charles River Labs, and we'll take all the rest of this stuff off so that we can, whoops, didn't want to take the BMI off. CCI has got some good room to move. Now remember, if you watch the trade scan series, if not, clue you in here real quick on the DMI. I like for that ADX to be breaking above 20. Notice it's between the 2 directional indicators, which is important from the rules of the DMI. The DMI will tell you, if you do research on it on its own, to watch for the ADX breaking above 25. I've always found that to be more conservative than it needs to be, and I like it to break above 20. But if you put that in your search parameters to break above 20, then you're going to get results all over the place. And so, I mean, my point, to be more specific, much higher, and a good part of the move is already over with. So I put it in there before it breaks above 20 so that we can watch it, and probably wouldn't want to pull the trigger on this one today because technically the ADX hasn't broken above 20, but this allows this to go on a watch list for me, and I'll keep an eye on this one over the next couple of days and see if the DMI does continue to set up the way it looks like it's going to now. And I just want to be clear on the fact that you just can't assume. And right now it's curling to the upside. There's separation between the 2 directional indicators. So you're looking at this and say, okay, we can go ahead and get in. That's going to break above 20. Let it actually do it is another lesson to patience is normally rewarded. We already had this big move here. So this one's kind of a round 2 as well. But go ahead and let it break above, especially with the fact that it's come back down and broken under 20. You want to make sure you watch it actually break back above 20. So this goes on the watch list for a couple days. We'll go ahead and update this one next week just for the heck of it, just to see I wonder what happened. I wonder if it did break up over the next day or two. But if you're following the rules, you can't put this one on yet. But that's the reason that I don't actually have it breaking above 20, is you can get in early, and there's still plenty of room for this one to move. There are targets up here at what, 212, 215, and we're trading at 181. So there's still plenty of upward move. I don't know if we look at the options real quick, make sure we're not just wasting time even talking about it. I'm not sure I've ever put a trade on this before. It's got options, but not very much open interest. Spreads are wide, but again, we've talked about that. The spreads are wide almost every single night, especially with elevated VIX. So, well, that would be interesting just to see what happens out of the ADX, but probably not enough open interest to actually even do a trade on that anyway. So you can come back here and go through these one by one, or when you're right here, you can just come down here and click, and it takes you right to the next one on the list. And that way you don't have to go back to the pre-computed line if you don't want to. So here is the ADX. Again, round 2 here, breaking back above. When you start to see this, this is another thing I think to take into account with the market itself. When you see these stocks that have had good runs and then it looks like they're ready to run again, usually that second run is not nearly as strong as the first one. So is that going to go along with what we talked about, you know, maybe we're going to go to the upside, maybe make new highs, really suck everybody into thinking, you know, oh, the market's at new highs, we got to get in, and then the big dump comes again. It would make sense. The market doesn't always do things that seem to make sense at the time, but that would make sense if it occurred. What I see in this one is a really nice, hopefully you're seeing this as well, you're starting to see these types of patterns show up, which is a nice ascending triangle. Am I back now?
Hi, Rob. Welcome back.
I have no idea what happened. So it was just me. It was my thing is what caused the problem.
It appears so.
Yikes! We had a heck of a storm earlier today, but it's not storming right now. So I have no idea what caused that. My apologies. All right. Well, I'm glad we're back. So what I was saying was, and I'm not sure how much of that you heard, talking about the ascending triangle and the fact that a lot of people tell you it's going to break to the upside doesn't necessarily mean it's going to. We could break down. We've got this, I think this is where I was. We still have this gap here that will get filled one day, whether it gets filled on this breakout or if it breaks out of here and goes up and reaches that target. You know, the home numbers, if you watch those, the economic data that comes out, the home data has been really strong. So the fact that we're consolidating here with a pattern that's showing a potential move to the upside, if you're looking for some fundamentals to back things up, and remember at Elliott Wave Options, we're technical traders primarily, but it's never a bad thing to have fundamentals backing your technicals. It just can't be a bad thing. It can only be a good thing. And based on what the housing numbers have been coming out, that's a good fundamental underpinning to where we could potentially go from here. So that's that one. And let's go to AbbVie. And I mentioned that we actually have an alert to the upside for subscribers on this one. You can see that the ADX is starting to break up with a little more direction there, a little more angle, which we like. And the main thing I like to see is the positive directional indicator breaking up, especially on a down day. in the market. So buyers were in control of this. So the negative directional indicator indicating selling pressure is lower and the buying pressure is gaining. ADX is moving up. That all still looks good in a wave 3. And this is another one of those that I think you're starting to see the pattern here. More of that 45-degree angle look rather than the more vertical moves, which give you the volatile breakdowns. On top of that, you can look over here and see that spent quite a bit of time in the resistance of that previous high, which makes a lot of sense. It broke down. When this wave 5 finished, it's supposed to come back to the previous 4. Well, it did that and more, right? Look at that zigzag right there. Just, I love this stuff. 161%, boom. Look at that, 1, 2, 3, 4, 5, 6 days. Right down there at the 161.8% extension level from the 61.8% fib level. So just beautiful zigzag on the way down. I'm gumming up the charts here a bit, but it's all good stuff. And so in the process of correcting the previous 4, they formed a zigzag of the way down, bounced back up, some consolidation. Look, there's your ascending triangle here too. Right there at the wave 5, and now it looks like it's breaking to the upside. So that one looks pretty good. We're already in that one, but if you wanted to follow that one along, there's still 10 more points to go. If you wanted to make that one our case study. And then Clorox. I probably should have gone back so that that one stayed on the screen. So Clorox is moving up. It's not too vertical. Really good looking DMI. Look at that. I don't think I have to tell you what the fundamentals are backing this right now, do I, with the whole second wave of the virus? And I think the interesting thing, or the most interesting thing for me, is the fact that they really thought that the summertime was going to suppress it, right? That's why everything started opening that, plus people were going stir crazy in the protests and everything else. But they all thought that the warm weather was going to suppress it and we wouldn't see this second surge until fall or early winter, and that hasn't proven to be true. It's back even with the warm weather. So moving upside, we have an 80% extension here. So the likelihood is that we go up at this point in time to a full 100% extension. We came right through there. You can see that support resistance level, right? Just around the 200 level, which makes sense, right? Because it's another one of those round numbers that we've talked about in the past. So it bounced down, hit it again, bounced down, broke above it, tested it twice, and now it's taken off. That looks like a little zigzag right there. So let's see. So that would give us the 61.8%. Extension is the target at 226, so 3 points from here. So if it extends up to the 100% extension, 236 is your expected target there on Clorox. So 61.8 at 220 is only three points more. I don't know if that excites you, but going up and making that wave 5, reach 100%. And here we go again with the 2 different price targets. That's going to be right about that 100%, or the 100% extension in the zigzag is going to be right about the 100% extension in the wave 5. So you've got 2 different patterns again, giving you a move to the upside. And it's difficult to imagine right now anything negative fundamentally coming out to stop Clorox, doesn't it? I mean, it just looks like there's going to be another big wave of buying. So 13 points from here could make a nice trade. So those are the case study considerations for this week. And I'm a little bit biased because we already have AbbVie. So I think Clorox makes an awful lot of sense. So let's do that one. I gave you all the choice last week and you couldn't make one, so I'm going to make it this week. Clorox goes into the record books for this coming week. 13 points out of a stock that's not that volatile. We'll still give you a nice, let me double check. Sorry, open my big mouth, but I'm pretty sure that the options are pretty liquid. Yeah, we're fine. Spreads aren't bad either. So you got August and then out to October. So there's no September, which probably would have been the ideal month if we hit the target somewhere around the end of July, early August. We may get up there. September would have been great, but better have a little extra time than not enough, especially when the options just aren't that expensive for Clorox. So the spreads are good. There's enough open interest. Yeah, that looks good. Clorox looks good. So there you have it, our case study consideration for this week. I'll go ahead and open it up to some questions and go from there. Okay, Kim asked, why not a long VIX trade now despite your commentary last night? So thanks for watching the YouTube video. And I don't know if you asked that before. I went through the VIX again today. I'm done trading the VIX. And you just, fool me once, shame on you. Fool me twice, shame on me. And it was very difficult. I used to, it was probably my best trading security back before they switched the formula for the VIX. I rarely had a losing trade on the VIX, and I traded it all the time. I was in and out of it all the time, long, short, just depending on where the trading range was. I had a good read on it, followed Elliott Wave patterns to a T. It was awesome. And then they changed it, and I've just not been able to make money with it. And so if you wanted to, more power to you. I'm worried about that. I mean, you could just easily break to the downside on that triangle. So maybe if you wanted to try, I can't do it anymore. I've lost too many times on it, and I'm done trading it. Love to look at it. I think it's a great indicator for what could go on generally in the market. I'm just not trading the VIX anymore. That's my personal preference. I'm not telling you not to do that. I'm not advising you not to do that. I can't give you individual investment advice anyway. But I'm just telling you that is my personal preference. I've just been burned on trying to trade the VIX. Even when I've been right on direction, they play around with the pricing and the options, because obviously I'm not wrong on direction every time. I'm a good technical trader. But even when I'm right, they play games with the pricing of the options. I just can't make money trading it. I haven't been able to. So if you can figure it out, please let me know how you did. I'd love to hear. Last week we looked at CMI. Let's take a look at CMI again. I think you can see the symbols now with Zoom, but it's CMI. It's a symbol for Cummins. So it was the 30th where we're last week, right here, 173, and broke up. It's a couple dollars higher. Did we look at, was it a strangle that was too expensive? What happened? Remind me, I'm getting old. Just had another birthday. As far as an upside move, if I remember correctly, what I was worried about was just not enough room left to move here. Wasn't that right? Is that correct? Yeah, I think that was the thing, is that it just wasn't enough room left for the move here. But it's pretty nice looking potential for the triangle forming there as well. And it broke out Looks like it's coming back to test it. I've traded CMI many times in the past, and it's done well because it moves. I've had good success with it. They don't have a great deal of open interest, but it's got September options, which is nice, so it's in a good cycle. I think at this point in time, rather than, it's made a nice march to the upside, but at this point in time, I would prefer a strangle. Square. SQ is a symbol for square, due for a correction. Yikes. that's pretty vertical. That's pretty darn vertical there. So the question is square due for a correction? And certainly getting awfully darn close. It's had a couple down days though, which is, it's a little bit overbought, as you can see from the 10-day moving average. You can see that separation there. So it's a little bit overbought from that standpoint, but these 2 down days in a row help that a little bit. You look at the DMI is telling you, obviously this was a very strong move and there was strength behind this vertical move. You already know now that those make me nervous. They can last for a while. I'm not trying to say that just because the stock starts going vertical that it's going to come crashing back down. It can do that for a while, but it will correct, and it's usually a volatile correction. They usually don't go straight up and then go dead sideways. You know, if they go straight up, then you get at best a symmetrical triangle, but that starts with a pretty significant corrective move before it builds that symmetrical triangle. It could easily come up and hit this target at 150 before it corrects. The DMI is telling you the strongest part of the move is over. That doesn't mean though that the move is over. It means the strongest part of the move is over. So it could calm itself down, get a little bit out of this vertical stuff, maybe go sideways, maybe pull back a little bit, and then still creep back to the upside. Very, very difficult to go long on that right now today though, because to answer your question, is it ripe for a correction? I don't know if we're ready for the wave 4 yet, but is it overbought currently? Yeah, it is. FSLY. Well, you guys like the rocket ship stuff, don't you? These big vertical moves. So here's an example of what I was talking about as far as telling you that the strongest part of the move is over, but it doesn't necessarily mean the move is over. So we got here, that was already getting up in the area. Now we're higher. So you can see that this vertical part that happened here, it's still gone higher from there, but much differently than this part of the move. So we kind of creeped up here. That was vertical, and that has calmed down a bit. I'm not really into, I was trying to see if there was a triangle there, but there's not really. CCI isn't showing you that it's short-term overbought yet. We should have looked at that with Square too. Yeah, Square is a little, see that CCI is up there with Square. That one's in danger land. This one's rested enough that it could continue from here, really could. And at 87, there's that 100, you know, that round number thing that I've talked about so often, acting as, that's actually a pretty good looking chart. That's a good find as far as a continued potential move to the upside. I'll take a couple more and we'll wrap things up. Howard, good question on Netflix. So let's take a look at Netflix because we have that as a butterfly for our subscribers. And the target price, the midpoint of the butterfly was 500. And so Howard points out the target price has been hit, understanding that the way a butterfly works is time decay is your friend. The longer it stays there, the better chance you have of breaking back out of the butterfly. 100% correct. All those things you said are exactly right. Two things to look at. One, the DMI is telling us that there's strength to this move. So we have to be aware of that. So there's a potential of breaking out. Is 500, it's one of those round numbers, likely going to give it a little bit of trouble. We're a little bit overbought with the 10-day moving average. So that all goes into the mix. We're at a 90% wave 5 extension. So even if it goes a little further from here, probably doesn't hurt us too bad. The thing that's frustrating with Netflix is they are holding so much premium in the calls. And it usually tells you two things. One, you've got a stock that is in high demand, so they're making people pay through the nose. Remember that the 500 strike being the midpoint of our butterfly, and our butterfly, by the way, for those of you that aren't subscribers and don't know what we're talking about, is 480, 500, 520 is the butterfly that we have. So these are the wings of the butterfly. So we prefer for it to stay in that range. That's where we make more money. It's a July trade, so we're nearing expiration. If it stays in here, the closer we get to July expiration, the more money the trade makes. And it could potentially, if it were to sit here a little bit longer, become a home run trade, grand slam trade. But they are holding a ton of premium in those 500, which are the at the money, basically strike calls now. And they will cut that loose at some point. And when they do, that trade is going to jump up in price. Now, obviously, we still want the stock to be between our wings when they do that, when they cut that premium loose. Otherwise, a movement outside of the wings could cut it off. So yeah, that's where the balancing act comes is how long do you expect a stock to stay in the trading range? So we did good by the stock moving up and hitting the dead center of our butterfly. So the analysis was spot on there. And yeah, it becomes a little bit of a, not stressful, but a consideration of how long can you expect a stock like Netflix to stay still, which doesn't stay still very long. Would be great if we got one of these things like this. Even this would be okay. Even if it were to climb a little bit, see, this is what's killing us here. See these big, huge days? That's why they're holding all that premium. And then now the 500's at the money. So they're holding all that premium in there, and it will come out. It'll just be like a whoosh when that volatility comes out of those options, and then the trade skyrockets in value. As long as they're holding that premium in those calls, then it keeps the trade from making as much money as it should have made. So the good part is that we were right. The part that's frustrating on it is that it got there by having big, huge bars. If we could do this, here's our grand slam right there. If we could duplicate that pattern with where we are right now, see, there's the same thing where it rocketed up and then it consolidated sideways. If we can get one of those, then we're going to be really happy campers. So we'll keep a close eye on it, watch the indicators. That's what you have to do when you're in situations like this is you rely on the indicators. You don't guess. You don't just flip a coin. You don't just say hope. You don't trade on hopium. You follow your indicators. And then if the indicators give us a signal that something could happen, then we'll go ahead and make a move early. But we'll give it every opportunity for the market makers to dump that premium out of those 500 calls. But really, really good question. Could one trade the VXX instead? And I do know people, I've not traded that, but I do know people that do as a substitute for, instead of trading the actual VIX, trading the VXX. I can't give you any personal history. on that. I don't really know for sure if it's a viable alternative. It might be. If you wanted to give it a try, I haven't, so I don't want to tell you one way or the other than I do know people that do trade that instead of the VIX because they've experienced the same thing that I have as far as the difficulty in making money from it. So yeah, it's a viable alternative. When you buy long options, you also consider IV. Absolutely. What I found is low IV is best for long options and high IV is for selling short. 100% true. Ditto. Absolutely. 100% true. That's exactly right. Yama, I hope I'm pronouncing your name right, but that's 100% true. All right, let's look at Tesla and then we'll wrap things up. Some of you are asking questions about stuff that we have already talked about. So I'm assuming that some of these were questions that, all right, we'll look at Tesla and then Cloudflare. Give me the symbol for Cloudflare. I'm not familiar with it. NET, okay. All right, so Tesla and NET, and then we'll wrap things up for today. You know, I don't get this stock. It's a cult stock. They're never going to sell enough cars to justify that. I mean, if the whole world goes to electric cars, maybe. To me, this is the Elon Musk premium in here that you're betting on him coming up with something else somewhere down the road that's going to justify this price level. The fundamental. This is one where you take the fundamental book and throw it out the window because there's no fundamental justification for where this stock is. To me, this is a great looking short, and I almost pulled the trigger on it today. Because talk about a vertical move. Here's a good example of the fact that a stock can go vertical for a while. Remember when I mentioned that stocks can go vertical for a period of time, but they eventually usually have a bit of a volatile comeback. And here's a perfect example here. We've already gone more than this. See, when they went vertical back here, look at that down day, 152 points. Now, it turned around, went right back up. That's not what I'm talking about. Why did it go back up? Look what it did. It's exactly what we talked about. So we had a vertical move. It came back down 152 points. And then there's your symmetrical triangle. Exact example of what I was just talking about a minute ago, that when a stock goes vertical, then it forms one of those symmetrical triangles. And then it broke out again, but then look what happened. It made a big move down, but of course everything under the sun did, right? So you can't really count that as far as a Tesla issue. But isn't it amazing that it had a triangle and broke out both ways? But if this stock is trading to the upside at all on the open, probably going to put out some sort of a bearish position on this just because it's just way overbought, and not for the long term, because you can't. The Tesla lovers are. You talk about the Federal Reserve supporting the market by pouring cash in. The Tesla lovers are one committed group. You know, I don't know where they want to see this thing go, but I don't think it's done going higher. And now they got an Elliott Wave target up there at 1,700, but I don't think we go straight there vertically. And I know we've got these gaps here to be filled as well. So if there's a opportunity on the open tomorrow, futures right now are up 9, so there might be. Anyway, but that's just an absolute rocket. The DMI looks like it looks strong. There's support to that move. This is not a fluke move. I mean, that there's strength in that move. As amazing as it is with where the stock is trading, that's a strong move. The CCI is telling you that, hey, all right, now enough for a little while. With short term, we've gotten a little crazy, but the DMI is telling you that the move itself is strong. All right, so we'll wrap things up with NET. I think it already broke out. Decent triangle there. It could continue higher from here, but the ADX is above the positive directional indicator, so not super conducive for this continuing. If it moves higher from here, it's likely not going to be a very strong move. So I think we missed that one on the breakout. I mean, there was a good triangle a couple of days ago, but at this point in time, I think at least half of the move is already over. The thing that would change my mind if you wanted to continue to watch this one, as far as a continued upside breakout from that triangle, is if that positive directional indicator can recover above that ADX, then it's a whole different scenario. But as long as that ADX is above the positive directional indicator, by definition of the DMI, that's telling you that that stock is a bit, the strongest part of the move is over, basically, is what it's telling you. And just to reiterate, because people come back, you said it was over. No, I didn't say the move was over. I said the strongest part of the move is over. Stocks can continue higher on weak moves. It happens all the time. But it just starts to get you thinking like, all right, at some point in time, I want to consider maybe taking some profits. So thanks for your attention, everybody. Really appreciate it. That was a great session. I enjoyed it. I hope you all did too. And I look forward to talking to you again next week. Take care. Be safe.